What's going on, guys? Welcome back to the channel. My name is Mark and this is Entrepreneurial Finance. Today what we're going to try and do is answer two questions related to Alberta's economy and their capital flight that we've seen of recent, okay? So the first question that we want to answer is, should you actually be looking at purchasing real estate in Alberta? And the second one is, should you actually be looking at purchasing energy anywhere in the world right now? So first thing to outline, since we're talking about Canada and Alberta specifically, Canada does have a extreme dependence on natural resources. It's tied very tightly to their economy. And what this means essentially is when you see the price of crude oil drop or the price of natural gas drop, Canada's economy will be taking a hit, especially the Prairies and especially Alberta. So the price of oil is really a far cry from where it was during the 2010, 2011, 2012 years. And there was a small crash at the end of 2014. It has rebounded since then, but is kind of leveling off and we are seeing it taper again. So this is for various reasons, but what we're kind of trying to do here is tie this to the Alberta Activity Index. And what the Alberta Activity Index is something that tracks economic activity. It is weighted by employment, average weekly earnings, retail trade, manufacturing, new truck sales, housing starts, rigs drilling, and oil production. Now, the graphs don't follow the exact same pattern, but you can see their trend is somewhat similar. During 2014, the Alberta Activity Index took a massive hit as the oil price took a hit. Another interesting thing to look at when you're talking about the Alberta economy is the number of successfully drilled wells. Okay. All these companies that are coming to Alberta and digging in northern Alberta have a percentage of successfully drilled wells, and that has basically been on the downtrend since 2010. So in this graph here, you can see it's extremely volatile, but the nominal trend is negative. So what that's resulting in is a ton of jobs leaving Alberta. Okay, so that's causing a spike in EI claims, but in this graph here, you can see since last January 2019, the mining and forestry industry have actually lost nearly 10,000 jobs. You can see some of the other jobs on here that have been gaining, specifically agriculture, accommodation and food services, as well as professional, scientific, and technical services. At the bottom of the list, business jobs have been lost. So you can see all those oil companies leaving, all their administration, all their sales guys, they're leaving as well. Like I just mentioned, the EI claims are spiking, specifically in single families, okay? Or sorry, in single people. So single people is in purple here, and you can see since 2016, essentially, it has been spiking. Now that ties into another graph I have here, which is the youngest provinces in Canada. You can see that Alberta is third on the list with the average age being 39.7. The only areas, territories within Canada to have younger ages are both Nunavut and the Northwest Territories. Okay, so now on to some recent news. For anybody not within Canada, there has been tons of protests circling the Trans Mountain Pipeline, also known as the TMX pipeline. So this was previously owned by a public company in the US, and they actually dropped the project. So a couple years ago, Trudeau reinitiated the project and basically said that the government would fund it. Now, what we've seen in recent weeks is there's been a huge amount of First Nations and Indigenous protests across the country, essentially blockading some of the CN railways and putting a pause on the Canadian economy. They're super against these pipelines, they're super against this industry, they want to keep their land pure and untouched, and this is kind of a massive political blockade for this industry currently. On top of that, OPEC, the Organized Petroleum Exporting Countries, and Russia got into an argument in recent weeks, and they're basically no longer holding up their production quota, okay? So Russia basically said, listen, we're not following the OPEC rules anymore, we're gonna produce oil as we see fit. So if we just look at Economics 101, when you have a huge increase in supply, and let's just say demand stays constant for the sake of this argument, we are going to see a drop in price. Now, last point for this side of the board is the salary by industry. You can see here in Alberta's economy, the mining, the foresting, the energy sector in general is by far the highest paid industry. So that's going to tie into the housing market, which is going to be my set of next points here. But if you have the highest paying jobs in Alberta leaving and going to the States, you are going to see a massive hit in the Albertan economy. Okay, so since we've been on this binge talking about the Albertan economy, I did some research into what their housing market looks like. A lot of this information is taken directly from RBC reports. And the first graph that I kind of want to talk about is the sales to new listings in Canada. So you can see here there's two dotted lines which basically separate the buyer's market and the seller's market. So you can see in recent months, in recent years, Canada is actually gone into a seller's market. Prices of houses in both Vancouver and Toronto are hyperinflated. You know, you're paying on average $1 million for a home in both those cities, where the average across all other Canadian cities is maybe half of that. What we're outlining here is that Canada as a whole is a seller's market, but if you compare and contrast that with the Alberta market, it's actually a buyer's market. Okay. We have this massive capital flight from these oil companies leaving Alberta. You have the Albertan economy kind of taking this massive hit, while other cities within Canada are looking to be sold. Potentially a great place to buy might be Alberta right now. Another interesting trend that I found on the RBC website was the home ownership costs as a percentage of your median income. Okay, so Canada as a whole, on average, you need 50% of your median income going towards your house, or in Alberta or Calgary and Edmonton specifically, it's only hovering around 40%. The housing market is also generally linked to consumer spending and consumer confidence, okay? So as the housing market is going up, which we have seen in recent years in Canada, not specifically in Alberta, but again, the metropolis cities of Vancouver and Toronto, that actually increases consumer confidence and consumers are much more likely to spend. We're seeing the exact opposite happen in Alberta right now, where it's a buyer's market. Not many people are buying houses here. Massive oil conglomerates are leaving this province and consumer confidence actually at an all-time low. Now, the last thing I want to mention before we get to answering the questions I mentioned at the start of the video is we have this massive coronavirus going on right now. We don't know what the economic impact is going to be. We're seeing travel bans all around the world. We're seeing a vaccine currently being developed, which is at least a year away, according to health professionals. And this, again, will significantly impact economies around the world. We just don't know by how much. Okay, so on to our first question. Should you be purchasing real estate in Alberta? Now, based on all the things that we just mentioned with Canada's natural resource dependence, as well as these massive companies leaving Alberta, consumer spending at an all-time low, you might be inclined to buy the dip, if you will. I would probably advise against this. Just because prices might be attractive, don't mean that they're going to appreciate anytime soon. Okay? The past does not predict the future, and there needs to be a significant catalyst to really prop up the Albertan economy to cause these prices to rise. Buying the dip is definitely not advised in this case. The last question is, should you be looking at buying energy stocks, okay? Not just in Canada, but around the world, in the US, in the Middle East, in Russia, and so forth. Oil company multiples are really trading near all-time lows, all the way dating back all the way to the 1940s. I think the answer is very similar to whether you should buy housing or real estate in Alberta as well. Even though it's at an all-time low, oil is a finite resource, and you would expect it to appreciate over time as that supply shifts leftward and we have less oil to distribute amongst the world. Now, the question is oil demand changing? Are we seeing a shift to renewable energy? Are we seeing an increase in environmental and social governance increase across the millennial generation? I think the question is yes. I think there needs to, again, be a significant catalyst to prop up the energy market, and I would advise buying against the dip. That's my opinion. Obviously, do your own research. I'm not a licensed professional. I'm not a financial advisor. Okay, so that's all I have for the video for you guys today. I hope you enjoyed. If you did, don't forget to smash the like button, share this video with a friend, and comment if you want to reach out to me. Okay, you can follow me on my social media on Twitter, Instagram, and Facebook. I will put them up on the page, and I will see you guys in the next video. Peace out.